Hello again. Now that we know what consolidation is, how can we look to identify the type of pattern that we are looking at? Well, there are numerous patterns that typically occur on price charts, and many of which can be identified by simply looking at the shape of the trend lines that bound the range of the consolidation period. First, let's talk about how to even identify when a consolidation period has occurred. After either a bullish or bearish move where price moves either into the up or down direction with some momentum, a period of sideways movement will generally follow, kind of like what we're seeing over in a couple of these places. Right after we see a large momentum move, we get a bit of consolidation before another move occurs, and then typically consolidation again, and then another move. So, if we are looking at a chart like this, how we can identify periods of consolidation is by just looking for a move followed by sideways movement. So we have an uptrend here, then we see some sideways movement over here. This would be a period of consolidation. And same thing over here. We have a strong bullish move, and then we get a bit of consolidation here. This would be another period of consolidation, another period of consolidation up here before price actually reversed to the downside. And same thing over here. We have a bit of price staggering where price slowed down, consolidated for a bit, and then reversed back to the upside where we actually see another bit of consolidation before price actually did end up moving back downward. If we were looking at a chart like this, and notice here we're on the 3-minute interval, we would see a strong move that occurred to the upside, a period of consolidation where there was a bunch of sideways movement, followed by another continuation upward. If we're looking on this 15-minute chart here, we'll notice that we have a downside move followed by a bunch of sideways movement where we can identify that consolidation has occurred before it ended up breaking out and moving to the downside. Now you'll notice that consolidation does occur on all different time frames. Previously, we were looking at the 3-minute chart, and likewise, once again, we're seeing a move on the 15-minute chart. If we take a look at this chart here, notice this time we're on the 30-minute chart and we're still seeing periods of consolidation. Notice we have a downside move, followed by some sideways movement before a continuation back downward. We can identify this period of consolidation simply by just highlighting where the sideways movement occurred. Now, since consolidation does tend to happen on all different time frames in all different shapes and sizes, one good thing to notice is when we are seeing consolidation happening on a larger time frame, notice here we're looking at the 2-hour chart where we have a large move to the upside, some sideways movement, which we can identify as consolidation, and then a move that continued downward. But when we are seeing this consolidation occur on the larger time frames, these typically correspond to a larger move following a breakout. Now, what that means is once we see a breakout to the outside of the consolidation bounds, then the move that follows will be proportional to the time frame that you're using. So if we're using a 2-hour time frame to identify the consolidation, we would expect a larger move to occur on a breakout versus something like, say, identifying consolidation on a 3-minute or 5-minute charts. When you see a breakout outside of a consolidation on a 3 or 5-minute chart per se, the move will not be as large as a move on the outside of a consolidation period on, say, the 2-hour, 4-hour, or daily chart. So just keep that in mind when you are identifying consolidation periods. The longer time frames that you're using will typically see proportionally larger moves that following on the breakout. Like for example, here we're looking at the 4-hour chart and we have this downside move right here that's followed by some consolidation right here, which is just some sideways movement before price actually did end up breaking to the upside. And notice how much larger this move is than the ones that we saw earlier. Proportionally, this is a lot larger of a move, and that's due to the consolidation being on the 4-hour chart versus the shorter time frames. Now, consolidation will even present itself all the way up on, say, the daily chart. If we look right here, go back in time a little bit, we do have a bit of an upside move where momentum pretty much carried, and then we get a bunch of sideways movement. Now we can identify the consolidation pattern here in this sideways movement before it ended up moving down. Okay, so now that we have shown how to identify when price is consolidating, how can we look to use that in our favor when we are looking to trade using chart patterns? Well, chart patterns can come in multiple forms. If we look over here, we'll notice that in this consolidation period, we have a bit of a rounding bottom. And notice it kind of takes the shape of a cup. Well, this would be referred to as a rounding bottom, and it typically results in a reversal to the upside. Notice we have the downside move here, reverses upward, and continues there. If we look at something like this, let's go ahead and zoom in on this. We can identify consolidation when it's not rounding by using trend lines. So how you can look to use the trend lines is just mark the bounds of where the consolidation range really occurs, and that will tell you a lot about the price. So if we look here, we have a strong upward move, price consolidating sideways in a downward direction, and this would actually be a bullish flag pattern. Now we're going to talk about what each and every one of these patterns does, how to play it, as well as even how to identify it in general in future videos. But for now, let's just go ahead and talk about identifying consolidation and marking the trend lines or identifying the shape in general. So here we have that bullish flag. Now, if we look over here, instead of using trend lines to identify this, when we see that price, it reaches two tops that are pretty near each other. This would be referred to as a double top. And there will be an entire lesson that will cover exactly how to play this, how to identify and spot them. But this is typically a reversal pattern that sees a move to the downside. And typically when you would look to make that entry is when it breaks the neckline of that M. Notice we have an M right here. When it breaks that neckline, that's usually when the pattern confirms and you could look for a move lower. We look over here to identify what this pattern was. What we can do is simply use some trend lines. Remember, trend lines are just to give you that general guide of where the highs and lows are. And what these trend lines will do is give you a general shape that you can look to use and play accordingly depending on what that shape is. So notice here, these two trend lines are converging and pointing into the downward direction. This would actually be a falling wedge pattern, which we'll cover very shortly in these coming videos, but just know that this is a reversal pattern to the upside. Now, if we look at this pattern over here, now this pattern is actually a very strong reversal to the downside pattern, and it's called a head and shoulders. Notice if I go ahead and draw the neckline right here, we'll see that we have a shoulder, an arch that creates kind of like the head, and then another shoulder before it ends up breaking through and breaking down. If we go ahead back over here to this chart that we identified consolidation on earlier, what we can do is just use some trend lines, identify where the bounds of consolidation are. And notice when I do that, we have a similar pattern that we saw earlier. We see a strong upward move, followed by a bit of consolidation where the trend lines point in the same direction, converge a little bit, and this would actually be kind of like a bull flag. Notice we have the flagpole here, and this would act as the flag. And this is, of course, going to be a continuation pattern where you're looking to make a move to the upside like that is shown. Sometimes the pattern might look like this, where if we go ahead and actually draw out the trend lines here, notice I'm not taking them exactly. These trend lines are just to give me the general shape, but notice when I do this one here, we get a bit of a triangle pattern. Now there are a bunch of different triangle patterns that occur. We have ascending triangles, descending triangles, and this of course would be a symmetrical triangle where price can break into either direction. This time it chose to break to the downside, and we could look to play an entry there. If we look over here, and we just identify the trend lines here, you'll notice that we actually do get another type of triangle. And this one would be, of course, another symmetrical triangle that ends up breaking to the downside. Same thing for this one here. If we just go ahead and draw out the trend lines that make up the pattern, notice we get a bit of a triangle pattern that breaks to the downside where a short position could be established, catching this move here. Now, last one that we're going to look at here, if I go ahead and just draw the trend lines, this would actually be the opposite of the one that we saw earlier, which was that falling wedge. Notice these two here push into the up direction and point upward and converge. Well, this would of course be a rising wedge, and it is typically a reversal pattern to the downside. Now that we have gone over how to identify consolidation and mark those patterns that make them up, in the next videos in this section, we'll be going over how to play the different patterns that make up the consolidation periods.